everyone. Hello, everyone. I'm El Farsan. I'm the Vice President of Philanthropy at EBCF. We're very glad you joined us today for this Q3 investment performance update. Our goal today is for you to leave this call with an understanding of how our investment pools performed over the last quarter and how that fits in the broader context of EBCF's work. We've set up this webinar, this conversation as a webinar for this first time, which means all participants will be muted and you'll be able to use the chat to ask questions. We will be addressing your questions that also came through the registration. And for those questions that we do not have time to respond to, we will make sure that my team and I respond to them after the webinar because we want to answer each question you asked us. So let's get into it. All of you are here because you've trusted EBCF with the stewardship of your funds. That's a responsibility and a privilege that we really take very seriously. And I want to start by grounding us all in EBCF's mission and investment policy. At EBCF, we believe that everyone should have the economic freedom to dream, heal, and belong. And we see our investments as a core strategy for achieving this mission. And there are 4 ways that we deploy to do that. We offer competitive market returns so that the philanthropic capital continues to grow and you can do more good in the community. We work with diverse and women-owned money managers, creating opportunities for people who have historically been shut out of finance. Number 3 is we invest our assets in socially responsible and mission-aligned sectors. You'll have the opportunity to hear more about that today. And finally, even your fees strengthen EBCF's community, leadership, grant making. It's all going back into the community. And we take a partnership approach to all of this. That's why we leverage our investment policy statement, which is available on our website, to keep us on track and in line with our values. We work with Greystone, thank you for being here today, to vet our money managers and invest and decide which investment pools we're going to be using. And our EBCF board provides that oversight for these investment decisions. For our partners, for our nonprofit partners here on the call today who have agency funds with EBCF, that's very important because what you are doing is basically outsourcing your chief investment officer work to EBCF for a very small fee of 1% that allows you to use the EBCF Community Foundation investment infrastructure to continue to grow your own capital. And we're excited to be your partner in that. To share more about the nuts and bolts of all of this, you're going to be hearing from Mona Williams. I'm really delighted to introduce her. Mona has been a member of EBCF's board since 2022. She's currently the vice chair of the board and the chair of the investment committee. Mona is also an Oakland resident. She has deep experience in investments, in investor relations, and she is a frequent speaker on diversity inclusion in asset management. Mona, take it away.
Thank you. Well, good afternoon, everyone. As Elle mentioned, my name is Mona Williams, and it is my absolute privilege to be here with my East Bay Community Foundation colleagues, and more importantly, with you, our donors, those of you who have donor advised funds with us, and as Elle mentioned, those of you representing agency funds. I think Elle beautifully laid out the importance of the work that we are doing in the investment area and how it is connected to the larger East Bay Community Foundation mission. Investments at East Bay Community Foundation don't happen in a vacuum. Our assets are invested in full consideration of our mission, and as she mentioned, expressed through our investment policy statement, executed through our investment advisor partner, and then with the proper oversight and engagement of our board. And so with that foundation, we really have 3 objectives that we want to achieve today. I think we also have some really wonderful folks who are going to join us in this conversation. So first, we think it's really important to reestablish a regular cadence of reviewing our investment pools with you to better provide context, information, and transparency around those investments. I think, like so many things that were altered by the pandemic, we lost a regular connection, but we are really committed to reestablishing that here in service to the work that we do together. I think second, we really want to review the investment performance. How have these pools performed? Why have they performed in the manner that they have? You know, people tend to think that you only ask that question when performance is challenged, but in reality, it's good to ask that question, whether you're seeking to understand really strong or challenged performance. So we're really excited to do that. I will say that we can't do it all in one meeting, but we are going to begin to explore how our pools are meeting our expectations, both from an investment and from an admission alignment perspective, because we are always looking through both of those lenses when we're talking about our investments. And then finally, we want to highlight how impact shows up in our portfolios by naming some of the often unreviewed talent of the women and diverse fund managers that are deploying socially responsible and impactful strategies on behalf of East Bay Community Foundation. And really excited today to include a real life example of impact at work in our portfolio. We're going to be joined by one of the fund advisors that is actually deploying assets in 3 of the 6 funds. So that's what we hope to achieve today. We're really excited to have this conversation reignited. And at this time, I am going to ask Mark Curtis, our partner from Greystone Consulting, to join me. And so as Mark is joining us, I'll tell you a little bit about him. He is well known in the industry for the work he and his team do advising nonprofit organizations like East Bay Community Foundation. He and his team have enjoyed a long relationship with our fund well over a decade. And so we're really pleased to be in conversation with Mark today. And we're going to get right to it.
Well, thank you, Mona. Thank you for that introduction. Let me also tell everyone on the call what a privilege it is, I feel, to work at and be part of East Bay Community Foundation. It's also a privilege to be on this call to speak with each of you. As Mona mentioned, we hope this is going to be a regular cadence going forward. Some of you, I know, have heard me present in the past. So for those of you who heard me present in the past, it's nice to be with you, if just virtually, nice to be with you again. Yeah. And also like meeting all of you that I haven't met or talked with in the past, and look forward to working with all of you in the future. Mona and I are going to give you an overview of the funds individually. I'd like to make a few just general comments before we get into the individual funds. First of all, the lineup is constructed in a way that it can represent a variety of investment objectives. For those of you who liquidity is your primary objective, we've got the cash pool. For those of you who have a longer term time horizon for all or some of your investments, we have those pools that are more return seeking and are more long-term in nature. When you think about this page, I would reinforce one thing, that over 98% of all of our assets, whether it's the cash pool or the opportunity pool, 98% plus of all our assets are in the definition of impact. So the entire pool is oriented towards impact. And again, before I get into the last pool, I also want to say something. I've done this, as Mona said, I've done this for a long time, since the 80s. I also want you to keep in mind one investment objective that we are committed to and that we believe in, that we can beat impact, but we do not need to suffer in terms of our investment returns.
Very good.
And as we get into the pools, I think we're going to be able to illustrate that. We're going to illustrate the good work, the mission alignment, all of that. And I would also have you think about the fact that our objective is not to suffer in terms of the investment returns as a sacrifice for that impact. We want to have the impact, and we want competitive returns.
Very
So,
good.
Mona, I'll turn it back
Appreciate
over
that.
to you.
Fabulous, Mark. We're going to go ahead and we're going to jump right into these pools. So we are going to start with just a quick discussion of our first pool, which is the cash pool. And now all of our donors receive a report on a quarterly basis. And so this is the information that you see in your report. We've lifted out the performance so that we could reduce all of the noise that's on that page and really just talk about the investment performance and specifically the third quarter. Before we do, I want to just highlight the information on the left-hand side. We have pool profiles in each of the reports that we send you. So we don't want to spend a lot of time going over those particulars. In this particular fund, we've got 5 different investments. You see the total size of the pool asset, the risk profile, low risk, the investment objective, capital preservation with some slight current income, and the types of investments are there. This is information that you receive on a regular basis. What you don't generally see when you receive these reports are what types of managers and what types of investments are in these particular portfolios. So here I want to highlight before Mark goes on and talks about how this particular investment performed during the quarter, just one of the exposures we have in this portfolio, which are the CDARs. So the CDARs are an important component of the cash pool. They are a mechanism that allow us to spread our deposits around to local community banks and diverse banks nationally with deposits, our deposits that remain FDIC insured. And why would we want to do this? Why would we want to spread our assets around this way? One, they provide community banks with access to deposits that they might not otherwise receive. They improve the liquidity and lending capacity within our community. They enable these banks to retain customer relationships, which is key to long-term sustainability, and it allows them to compete with the larger banks. So we love that this pool has this type of mechanism. So in addition to providing a return, it is also providing impact in our community. So with that, I'm going to ask Mark to just tell us a little bit, 2 or 3 highlights around what drove this performance during the third quarter. And we'll keep it to a few minutes, Mark, and then we'll move on to the next.
Sure. So the underlying investments in the cash pool, think of it as a money market fund, but it's curated differently than you might think of a money market fund. On the corporate issuer side, it's those issuers, those companies in which the CEOs have signed on to the UN Global Compact of Sustainability Standards. So the CEOs of these companies have signed on to that Global Compact. That is the universe of corporate short-term debt that can be invested in. And then we also, in this fund, are doing taxable municipal bonds. So for example, a taxable municipal bond would be the Contra Costa Junior College system, which has actually issued taxable municipal bonds. So what we've asked the managers in this portfolio is, and it's kind of a common thread wherever we can express this is we want 100% impact. And anytime you can invest in our community geographically, search out those opportunities. So this fund is also doing that. So think of some of the taxable municipal bonds which are in this are monies that are invested in Alameda and Contra Costa County and in our community geographically as well. You'll see the returns here. Short-term yields have been very high now for a couple of years. So if you look at these returns, you'll see that year to date, we're up 3.64. For the 1 year, we're at 5% plus on this fund. And keep in mind, this is stable value. This is a money market fund. This is daily liquidity. That yield will change every day. A little bit of the performance is, the offset is that is going to be up from the CDARs, which we think is mission alignment. We think that is a worthy investment. So this is going to be a combination of short-term investments as well as the return on the CDARs. And you can see how that all rolls up in terms of our return on this pool.
Very good. Thank you, Mark. We're going to move on to the short-term pool. If we take a look there, we've got the pool characteristics of this particular investment on the left-hand side there. Again, these are in your report, so we don't want to be redundant in that regard. But again, what you don't see in your quarterly reports are the underlying managers. And in this particular pool, we've highlighted the manager, GHA. GHA, Garcia Hamilton, is a Hispanic-owned firm, very high-quality fixed income manager, managing for institutions like East Bay Community Foundation. This organization is 100% employee-owned and operated. It is certified as a diverse business. And I think the point here is that East Bay Community Foundation does the work to find and vet these managers, provide access to opportunities to manage assets like those of East Bay Community Foundation. And these firms traditionally have been excluded from these opportunities. They have been reserved for large, well-known organizations. So we are removing barriers to entry. We know that large and well-known is not synonymous with best, and we are delighted to have Garcia Hamilton in this portfolio. So if you could tell us one or two points about the performance during the third quarter, Mark, that would be fantastic.
Thank you, Mona. I'm going to introduce a concept that is woven through all of the funds at East Bay, and it's an investment thesis that's core to our view of the world right now. We have been for some time concerned about inflation. We're concerned about risks in the portfolio from higher interest rates. So when you look at this pool, we made a conscious effort that you're going to see the title short-term pool. Think of this as the bond fund pool in our lineup. And what we made a conscious decision was to keep this to a very short-term maturity pool, 1 to 3 years. We don't have core bonds. We don't have a longer maturity bonds in this portfolio. So now let's get into what Mona asked. How is the third quarter? How are we doing year to date? What does the 1 year look like? So for the third quarter, you'll see this fund did 2.8%. Well, that is a wonderful return for 90 days in a short-term bond fund. That return is the result of interest rates declining, anticipated Fed cuts. And so one way to look at this fund is that in a world in which rates are either flat or coming down, you would expect to have very strong performance. If you look at the 1 year return on here, you'll see 6.3%. Again, a little longer than the cash pool, some volatility as a result of the underlying assets, but this pool, the most recent time period, has benefited from a slight decline in interest rates.
Very good. Thank you, Mark. We're going to keep moving because we want to get through all of the pools. And we look forward to doing this, building on this conversation quarter after quarter. So our next pool is the intermediate term pool. We've got the profile there, 10 managers managing about 12.8 million. We see our risk profile, our investment objective. We've got some growth objective there, still capital preservation, but growth over capital preservation. Again, the managers that you do not see that are driving this performance, we've highlighted one here. One of our favorites, Community Capital Management. This is a manager that manages impact investing portfolios of government-related bonds issued to promote community development. When I say we love this investment advisor, they all have to perform, but we really do love the work of this investment advisor. When you look into their portfolio, you can see investments in bonds that are in our county, in the counties in which we are doing the work for our community. So when we talk about the notion of mission alignment with respect to our portfolio and our mission, it's a perfect example. So Mark, why don't you tell us about the performance of this portfolio in general for the quarter and sort of what drove the outcome?
Thank you. So on this pool, we have the ability, if you look to the pie chart on the bottom right, that is our targeted allocation. The actual allocation, that's where we'd expect it to look like over time. But we have the ability to express a bias, either more positive on equities or more positive on the fixed income bond world. What we've done in this pool now for the last couple of years is we've had a very positive outlook on equities. Again, we have been conservative in our approach towards the bond market. The way I would have you roll up on this fund, you can see the year-to-date numbers. We were slightly ahead of the benchmark year-to-date through September 30 at 10.37 versus the index underlying at 10.27. Remember, that is a non-impact generic index. Remember, we are an impact portfolio. But you can see strong returns year-to-date. You can see strong returns on the last 12 months. But I would go back to one of my original theses here, that what we believe. We can be impact and we can outperform. We do not want to accept underperformance versus the generic indices. So when you look at this fund, what I would highlight to you is, in 5 of the last 6 years, 5 full calendar years, and we ran this portfolio through yesterday. So in in 5 of the last 6 years, this pool has outperformed its non-impact generic indices. The question is, can we be impact investors? And I would argue you should be willing to accept maybe some reduction in return for the benefit of the good work that being impact is doing with your financial assets and with our management fees. The question is, though, when you answer it, we are not sacrificing in terms of return. So throughout the pools, we have a constant theme. We are positive on equities. We are neutral on fixed income. And where the proof in the pudding is, between our underlying managers and our ability to express a bias in terms of our asset allocation, 5 of the last 6 years, we've outperformed the indices.
Thank you, Mark. I think you make such an important point, this notion of, I say it all the time, that you can have it all, you just can't have it all at the same time. And there will be periods where the impact investments are performing quite strongly. Others periods of time where they will be more challenged. But we are invested for the long term, both in terms of our investment expectation as well as the impact that we expect those investments to have. So I love these snapshots, these quarterly snapshots that allow us to look at a moment in time, knowing that things change over the long term. So thanks for making that point. We're going to quickly move on to our long-term ESG pool. We have about 13 million in this pool. You can see spread across 2 different managers. And we've got our profile there on the left. I've highlighted one of the managers, slightly different. We like this manager and we like this manager's strategy because it emphasizes the ESG components, the environmental, social, and governance components. And they target issuers with strong ESG profiles, as well as issuers that are values aligned in their solution creating. So we love this manager for this portfolio, and we're going to talk a little bit about how this portfolio has performed during the 3rd quarter. Mark.
Great. So this was, for those of you who've been with us for a long time, you'll remember this was our original 100% impact pool. On this pool, a little different than the others, we do not change the asset allocation. Think of this pool as always 70% equities, 30% fixed income. So we keep the asset allocation exactly the same all of the time. And this pool is 100% impact at the investment level. We do have, as Mona pointed out, our fixed income manager is an MWB, a minority women owned business enterprise. If you go to this pool, it is global equities, fixed income. I don't want to, I think if I were to think about Mona's comments just now, she's probably telling me, Mark, don't sell performance, don't emphasize performance because you can't guarantee it. I'm sorry, I'm the holder of responsibility. The committee looks to me a little bit. I do feel responsible for performance sometimes. Maybe I shouldn't, but I also want to tell you the report card on how is East Bay, how does the investment process at East Bay, working with Mona, working with Brandy, working with the investment committee. I want to emphasize the results and does it work? I'll say again, on this pool, if you look at it, we have outperformed 3 of the last calendar years. I will tell you something that's not on this about the 3rd quarter and the year to date. We are now ahead of the indices year to date on this pool. And if you went back to the 2020, the last year we underperformed, it was 4 basis points. And so again, the process works. Assets are managed efficiently at East Bay, and we do not accept in our minds that there is a value we're trying to accomplish in mission alignment. Again, this pool is different, 70-30 all the time, no asset allocation, no alternative investments, very simple. And again, we've outperformed 3 of the last 4 years. We are ahead year to date, and the last year we underperformed was by 4 basis points. So that is the original long-term impact pool.
Very good. Thank you so much. We're going to move along quickly. We might have time, as Elle mentioned, for 1 or 2 quick questions before we bring in our featured manager today. But if not, we will have an opportunity to follow up with a communication to all of our participants today to answer any questions that you have as a result of the material we've reviewed. So quickly regarding the long-term core diversified pool, large number of managers in this pool, fairly substantial asset size, about 100 million. You can see the risk profile, higher risk, the investment objective, longer term, and asset mix. You would expect with the higher risk, you would have a different type of assets in that portfolio. So we've got, in addition to stocks and bonds, and the REITs that we talked about previously, natural resources, we also have hedge funds and private equity. In some of the future learnings that we're going to do, we'll do some teach-ins around the different asset classes and how they're expected to perform. Manager highlight here. Really delighted to have Vista Equity Partners. It is a Black-led firm, arguably one of the most successful private equity investors in the industry. They invest in all the things that are sort of driving the world these days: software, data, technology, and we are proud to be among one of the investors in the Vista Equity Partners fund. And so with that, Mark, just quickly tell us what has driven this performance during the third quarter.
And Oakland-based. And so if we can find a manager in our geography, of course, even that would be wonderful, right? To everybody on the call, think about that. So again, this is a pool in which we express a tilt. We are asset allocating the pool. You'll see the long-term. Those are the targets. That may not be where we are. So again, consistent with what I've said, assume we're going to be on the higher end of equities. We're going to be neutral or conservative on our fixed income. We do have private equity in this portfolio. We have a wonderful private equity portfolio. It's starting to get mature now because we've done it for some time. So we're getting wonderful returns. We're getting distributions from our private equity portfolio. But this is really, think of this as a long-term pool with diversification, including private equity. Again, what I'll say on this pool, when you think about it, we have outperformed, again, 5 of the last 6 years. So you can see the years here. We are ahead year to date on this pool. So again, we have impact. Are we suffering from a performance? Our aspiration is not to. There are no guarantees, but we have outperformed the indices 5 of the last 6 years on this pool.
Thank you. Thank you, Mark. Let's talk quickly about the 6th of our 6 pools, the opportunity pool. A beloved pool by all. It has the highest concentration of diverse managers of any of the pools that we run. Large number of managers, 22. Asset value of just below 40 million. Like the previous 2 pools, higher risk, longer term capital appreciation, expectation of growth over the long term versus pure capital preservation. Similar asset mix. Here again, you've got hedge fund and private equity exposure within this portfolio. Impact manager, Illumin Capital, one of the 22 managers managing assets here. Venture fund that backs high-performing, diverse, and women-led fund managers that have the potential for top decile and top quartile performance. So by investing in managers, their work becomes catalytic, and we're just delighted to be able to partner with Illumin and have them manage assets on our behalf. They are doing important work of providing a pathway for investors to invest in these types of managers, and we are pleased to be working alongside them. I think what's really interesting, if you ever have a chance to learn a little bit about this fund, their strategy includes the study of implicit bias and how that factors into decisions that people make about all sorts of things. And they're incorporating this into their process to increase equity inclusion within the financial services industry and within the market. So we are pleased to have this as one of the 22 investments in our opportunity pool. And why don't you tell us a little bit about how it's performed during the third quarter, Mark?
So a couple thoughts to pile on to what Mona said. Think of this as being, we are a little bit less liquid in this pool. We're going to have a little bit larger commitment to private equity and the illiquid space. And so sometimes when the markets are very robust and very strong, when you think about a private equity fund, your valuations kind of lag the market. So just keep in mind that when you have a large commitment or a larger commitment to the private equity space, your mark to market or your reporting numbers can lag public numbers. So keep in mind, as I talk about the numbers, that can be the case. Another thing to think about in this portfolio is we are also looking at emerging managers who the larger institutions, someone doesn't have the bias or the thrust that we have on this pool, that are hard to raise those dollars. So we do have an emerging manager bias to this pool. So think of how that might be different as you're allocating your funds from the other pools. Year to date, with all of that said, for the quarter, we're at 5.33 versus 6.33 year to date. There is some lag. And of course, again, the lag is going to be from the amount of illiquidity we have in the pool. And it's very hard for private equity investments to keep up the paces as a stock index, which is real time every single day, kind of mark to market. So the numbers are strong, but this is a different pool. So as you're thinking about allocating your fund, think about, just understand what it is you'll be investing in and how it is different than the other pools. But it does give you another a way to express yourself within your portfolio, within your assets.
Very good. Fantastic. Mark, really appreciate the review of these pools. And I think we might have time for one quick question. We might also be able to make a little bit of time following the comments from our invited manager guest. And we can take all of those questions or a few questions at the same time.
Indeed.
Okay.
I want to thank Cindy for asking that question that I am asked all the time by all of our fund advisors. So thank you, Cindy, for asking that question. We'll try to answer it for everyone. Her question is, you know, after this presentation, how would EBCF prefer fund advisors to allocate their assets to help them maximize their mission? And then we know that there's a legal component to that. So maybe Mona or Curtis or Mark, if you could take a minute to talk about how much advice can we give in the context of choosing which pool?
Yeah, I think, you know, I think we all understand that we can provide the options. We, meaning East Bay Community Foundation, different than our advisor, Mark, cannot recommend one over the other. It is not our role. We provide a wide range of options so that our donors can think about their time horizons and what best aligns with that time horizon. What we can commit to and the work that we do is ensuring that those options are the best that they can be. The work that goes into sourcing, finding the managers, doing the investment due diligence, doing the operational due diligence, understanding that they are of investable quality, and then the asset allocation work to make sure that they fit in a complementary way with the other managers that are in that portfolio. That is what we commit to do. So regardless of the six that someone might choose, know that we are fiduciaries. We spend a lot of time to ensure that those portfolios are designed in a way that will achieve or expected to achieve investment performance, outperformance, as well as mission alignment. So,
And
Mark, yeah.
Mona, I think, please go ahead, Mark.
Oh, go ahead, Alec. Mona called me out. I was going to answer because she used my name. I don't want me to,
It's okay.
want me to
Yeah,
give an
it's-
answer to that.
Yeah,
First of all, I work for East Bay Community Foundation, and therefore I work for you. And I'm available to you. And here's how I can help you, and here's how I can't help you. Mona said something I think is really important. You have to look at your principal, your ability, what your own fundraising is, and how you're granting and what it is you're supporting. And I can help you understand the pools. I can help you determine maybe an asset allocation, but what I will never quite know is your true liquidity picture. And so a little bit, I'm here, I'm a resource to you, love to talk with you, love to help you with these questions. But what I never quite know is, I'll never know your own liquidity needs. I'm going to go back to what Mona said, which is really important. You have an offering of pools, think them as time horizon. As you're allocating your monies, think about your time horizon. I will say one thing. If you think your principal of your portfolio is really in a strong financial position to meet your needs, if you think your ability to raise money is in a strong position to meet your needs, and you answer that affirmatively, and you answer one more question. Do you want the fund to last? Do you want your fund to last forever, for perpetuity? If you can answer those two questions, what I'd have you then think about is move to the right, be a long-term investor. Because the studies have shown, I'm going to keep it really simple. The studies have shown in the area, the science of managing, if there is such a thing as the science of managing nonprofit assets and endowments and foundations, the more you have in equities, the longer your money will last, the more money you will have. And so I'll just leave you with that thoughts.
Yeah. Elle, there might be a few other questions. You let us know. We will.
Well, I wanna answer Cindy because she also posted that question again. And she made a clarification. I think she's giving me an opening to do my job, which is the following. Her question is, how can we as fund advisors support EBCF to maximize EBCF's mission? And I think, that's a direct call. So I'm going to do my job, Cindy, here and say, you have all heard from me, heard from Brandy. Many of you have already given to the EBCF Future Fund. Please be generous this year. Support us rebuilding this organization so we can step into the next 100 year. And I'm happy to have these conversations with you one-on-one. And also want to thank all our donors who are on the call today who have contributed very, very generously. So with that, I turn it to you, Mona, so we can hear from Rachel.
Very good. Thank you. At this time, I would like to invite Rachel to join me on the screen, and I want to welcome Rachel Robichaud. Rachel is the founder and co-CEO of Adesina Social Capital. She is one of the most highly regarded and sought after professionals in the impact and mission aligned ecosystem. And her strategy is deployed in 3 of the 6 East Bay Community Foundation pools. So Rachel, welcome. We are delighted to have you here with us today. And I am going to start by asking you to tell us just a little bit about your firm, but more importantly, what compelled you to take this path? I've heard this story. Every time I hear it, I'm moved by it. So I'd like you to just give us a little background on how Adesina Social Capital came to be.
Sure. And thank you so much for having me. It's a really sweet community. And I live in the East Bay. So I love that East Bay Community Foundation exists and does what it does. I live in Berkeley specifically, but I was born and raised in Oroville, California, which is this poor, segregated neighborhood. I know that the more highbrow term is economically disadvantaged, but we were poor. It's how we've always talked about it. And I'd go, I don't need the slide up just yet. So what I like to share with people is in the neighborhood that I grew up in, we were families mostly led by women, and that's a very common story in the Black community, but it's not necessarily in communities when I'm speaking with donors or with other financial professionals. They don't have that same background. So our families were mostly led by women because the men had overwhelmingly been either incarcerated or killed by the police. I personally have 3 close family members who were killed by police officers without repercussion. And the combination of racial, gender, and economic injustice kind of really tied themselves together. There was, we were poor because we were Black and because we were women. The jobs went to generally men in the community if there were jobs. And speaking of jobs, Oroville is where the Black community came to Oroville from the South during the Great Migration in order to help build the big dam there. It's the tallest dam in the United States. And the Black people who came up took the highest risk jobs, so very dangerous jobs building the dam, and were redlined into living into the south part of Oroville. We called it the South Side. And in 2017, after some extreme weather, and it was kind of the first wave of the extreme weather, kind of big climate impacts we've all are noticing more regularly now. In 2017, the dam started to fail. And when we looked at the news, what we saw in the news was this flood inundation zone that went right through our neighborhood. And we realized we had been redlined into living in a neighborhood that was going to be the first residential neighborhood to flood. And I had already had in my heart the necessity of putting our collective resources toward racial, gender, and economic justice, because we have really deep, large societal problems. And so we really need our collective resources in order to address them. Climate wasn't very much on my radar, and this put it on my radar. That's when I woke up. We already had created a social justice investment strategy, and we began to deeply integrate climate justice as well, because it's going to be the same communities over and over again that are hit by these, by the various ways that we've set up society to advantage some over others, whether that's white over Black, men over women, etc. It's also people over the health of the planet that we call our home. So it was after that I started the strategy and kind of launched it publicly the following year. And that strategy ended up becoming Adesina Social Capital. And it was really born of this understanding about 2 big realizations. One is these issues are always going to be linked, so we can't work on them in silos. And we have an industry where we work on climate issues here and gender here and maybe racial justice there, and maybe not necessarily as much in finance. So that's the bad news, is that it's siloed, but the good news is that if you work on them together, you can achieve some amazing impact results, which I'll be sharing some of those with you. The good news is that by living in the situation that I came from, I'm very clear that those closest to the problems are also closest to the solutions. And I know a lot of people with the East Bay Community Foundation are very familiar with that and steeped in social justice movements. So I made my decision at that point to dedicate my life's work to bringing our collective resources together. And here's a hint: most of our collective resources in society are in public markets to advance racial, gender, economic, and climate justice. It's a strategy that is intended for the core of a portfolio. And in our industry, we have somewhat given up on achieving high impact in the core of the portfolio where most of our assets are. We tend to use a carve out or kind of like just put a small percentage toward the high impact that may be in private markets or in a very thematic specialized strategy. But what we've really specialized, and you can bring up the next slide, what we've really specialized in doing is partnering with social justice movements and bridging the divide between the goals of social justice movements and financial markets. And we primarily do that by mobilizing investors, and we build investment portfolios that deeply integrate their needs, voices, insights themselves kind of into the entire process. So that's kind of our origin story.
That's a great origin story. So as I shared earlier, East Bay Community Foundation is invested in the Addisina Social Justice Global Equity Strategy across our portfolio. So you gave us a little insight into that strategy, it being sort of a core strategy. Talk to us a little bit about the thesis, the investment thesis behind this particular approach, and how you actually go about then deploying the assets.
Sure. That's really our investment thesis is in three parts, three core beliefs. We believe that social justice movements are providing investors with early indicators of risk in public markets. These are non-market participants, but they are communities, right, that are taking action against the injustices that they're seeing. We believe they provide metrics that are useful in assessing long-term corporate profitability. And we believe that most people who are investing in the stock market are looking for sustainable long-term returns, and that those are achieved by investing in sustainable companies for the long term. So to us, it's a very simple equation. I can give you kind of a few examples if that would help illuminate it.
Yeah, that would be great. You know, you have a slide that talks about, you know, who decides the issues and how to measure them, and we'd love you to take us through that.
Absolutely. So what really ends up changing is ultimately the metrics. So financial professionals have spent a lot of time talking to each other about the problems of the world and how they might be solved. And so what we did was take an entirely different approach. So you can go to the next piece here. If you're looking at the issue of racial justice, a very conventional ESG metric is diversity and inclusion policies. Those are great. They are wonderful for representation, but they don't really address some of the core issues that our partners, the Movement for Black Lives, sees and really wants investors to be addressing, which is mass incarceration, which is why we do such extensive work in the issue of decarceration and looking at the root causes, right, of that systemically racist institution and how public markets investors have participated in it and what we can do about that. We are happy to say from an impact perspective that we led the investor coalition that stopped the Alabama prison bond from coming to market a couple of years ago. And that was the first time in history that shareholder activism stopped a new security from coming to market entirely. So that's one of the impacts that we've had. We can look at gender justice as well. You can see what happens when you get different people telling you what to measure. During the Me Too movement, people were very focused on gender justice portfolios. Women on corporate boards is what was the most important. And but when we talk to survivor communities, they told us it's forced arbitration for sexual harassment. And I'll make a long story short and say we led the investor movement to end forced arbitration for sexual harassment, which was the core cause of the Me Too movement. And that liberated 130 million workers. So when people think about the kind of impact that's possible, it's really important to be investing in the new economy, but it's extraordinarily important also to be investing in a high impact way in public markets, because what we can do in our own portfolio is very admirable, but what we can do inside of a coalition of multiple billions of dollars of investments is change the way that, you know, forced arbitration for sexual harassment works across the country. It's no longer legal. And there's work that we've done where we lead the $1 trillion coalition that's working on ending the sub-minimum wage. And we've really brought to light this core issue of extractive agriculture going beyond fossil fuels with our partners to really start to address for the first time in public markets the fact that we are funding at least 1/3 of greenhouse gas emissions by being investors in extractive agriculture. So this is the kind of impact you get: root cause issues that can be addressed, and you get deep movement on these issues.
Thank you. I have 2 questions. So you shared some information with us about the investment and impact life cycle. And what would you like our donors to know about those 2 elements? And I have a specific question, and I'm sure you get it often, and we've talked about it a little bit. In recent periods, stock market has been driven by a handful of securities, those securities known as the Magnificent Seven. They're the tech stocks. Many of them are AI focused. And if you're out of those, you've missed some of that run in the market. And I know that those are not securities for very specific reasons that end up in this portfolio. So just talk a little bit, if you can, in our last few minutes together, and we are going to have you as a featured manager where we can really drill down into your strategy, just what you want people to know about the impact life cycle and how you think about excluding those types of investments.
Sure. Well, as I've mentioned before, we collect insights and data directly from the communities most impacted by racial, gender, economic, and climate injustice. We use what they give us to research and evaluate companies. We start with 9,000 companies, we get down to about 600. We use some of that same data to mobilize and engage investors. And we do that both with those investor campaigns. And then if you go to the next item down there, you can see that we actually have a move the needle on these social justice issues, as you can see, that some of the impact that we've made on the sub-minimum wage. When you think about, they call them the Magnificent Seven, inside of Alcina, we call them M7. When you think of the M7, they would have been excluded from the process and have been excluded at the research and evaluate point. And so the reason for that is that they have violated usually multiple of our criteria. We have over 40 different criteria and then 80 different ways of measuring those criteria. And some of the violations include forced and child labor. At one point, over 70% of the M7 companies were tied to modern slavery, which is just surprising to many people, but it was a problem in the supply chains. So the way that we think about it is that our returns are market-like returns, but they are non-exploitative, non-extractive. And by investing with us, you are also investing for a long-term sustainable future and making large-scale systemic change, because the market may get some short-term gains out of extraction and exploitation, but we're looking for those long-term sustainable returns and the kind of impact that we should be having in the core of our portfolios.
Well, it's wonderful. I appreciate your sharing that insight. That's a question that people have all the time, and it's good to understand, sort of the thinking and the methodology behind things that are included and things that are excluded. Rachel, there just is like not enough time. We are going to have you back as part of our impact education session so that our donors can spend more time with you. I will ask Elle whether we have time for maybe a quick question, but again, any questions that we don't get to today, we've made a commitment to make sure that we follow up in writing to get everybody's questions answered. But Elle, I would ask you really quickly.
We actually have questions for Brandy, so I think we should just move into that section and allow Brandy the time to answer those questions as well.
Then I am going to take this opportunity to thank Rachel again. We appreciate your participation here today. And also to thank Mark for taking us through an overdue conversation about the investment pools. And we will look forward to doing this again next quarter. And with that, I will invite our CEO, Brandy Howard, to join us.
Thank you so much. Elle, I'm going to get your direction. Do you want to go to questions, or my remarks can wait till after the questions?
I think you can go to your remarks because they will address some of the questions.
All right, good. So first of all, thank you so much, Mona, for your leadership. I want to thank all of you for joining us today. I know sometimes when we think about investments, what's not top of mind is thinking about community foundations. But here at EBCF, we are really committed to using all of our resources and all of our assets to be that lever that we pull to exercise our collective power to advance our values. So whether you're a nonprofit agency, fund here at East Bay, an individual or a family member or a family who are housing your philanthropy here at East Bay, we really just appreciate your decision and thankful for your trust in us with your assets in this particular journey and our impact together. I also want to acknowledge that all of our work collectively is a team effort. So I want to really thank Greystone, Mark, and you and your team who's been around with us for many years for joining us. And for Mona, you are such an asset to us, and for you to give of your time and talent here at East Bay for us on the staff, as well as for our donor and partner community. I'm just extremely thankful. My last really thanks is, well, not last because there's so many thanks, but really to Rachel. I really appreciate your work at Ascena. I really appreciate your story you shared, because that's our work. When we understand the story, when we understand the real impact on humans and our collective society, we really understand what it takes to do this work and to do it well and to be good stewards, not just of our capital, but of this earth. So thank you so much. The decisions that we make around who manages our money are very important ones. We believe that East Bay is the partner to all partners, and our partnerships have to be in deep alignment. And so we continue to highlight the impact of our impactful fund managers in future webinars. But I really cannot think of a better place to start than with Rachel and really understanding Ascena and how much it's a direct connection to our impact here at East Bay. Elle, as you mentioned, as Elle mentioned at the start, we hope that this gave you a little better understanding of our investment pools and where we are going, and really not just investing for investment's sake, but really pushing us towards mission and return so that we continue to do good work. How it fits within our larger context of our strategy and impact we want to have on the actual material conditions in our community, and address some of the things that are pressing. One of the things that came as a question before was, what are some of the things we're hearing from our community right now post-election? And I think some of the things that we hear, and Rachel, you really spoke to some of the real pressing issues that have been work we've been pushing for many years. And people fear that we may have to turn away from or may not pay as much attention to. So safety and security, both from the physical, the financial, but really it's the cyber. Are we taking care of all of our institutions and continuing the work we do? Are we making sure that we have space for addressing the immediate needs, the needs of the future, but also the real critical resources necessary for us to really think about building systems that are the response to what we're hearing are the outcomes from the current systems that Rachel just laid out for us when we hear about those communities who are vulnerable and put at risk. And so we are working really close with our community on a daily basis, and working with partners in our investment like Ascena allows for us to say that our grant dollars, the dollars we're working with our agency funds who are doing amazing work and using their assets to continue to drive their operations and strengthen our nonprofit infrastructure, and the grant making we do, as well as our investments, are all a full just a full spectrum of impact that we drive over in the East Bay. And so I really thank you all for joining us today. To my team who really supported this webinar, there's so many people you all don't see on the back end with lots of technical work and chats going back and forth, making sure that we are responsive. But I really hope that you are, during the season, keeping your eye for future invitations as we continue this conversation into the new year. If you ever heard me talk about our work, one of the things that I think is critically important is that we think about what are the kind of realities we want in our future. And so our investments, our grant making, our partnerships are all ways that we can think about how can we have a future that is not just different, but a future that allows for everyone to dream, heal, and belong. And so again, I thank you all for being with us today. We look forward to continuing these conversations in the future. And please feel free to reach out to any one of us on the EBCF team if there's further questions or just conversations you want to have and pick up from today's webinar. Thank you.
Can we stop the